taking time today to join me on Better Banking to talk a little bit about credit and the types of products and services that credit unions offer for those people that either looking to establish credit, repair credit, or any other types of loans that may assist members of the community.
Mm-hmm. Thank you. It's nice to be here.
Let's begin by talking a little bit about what types of loans credit unions can offer people that are looking to establish credit.
Absolutely. At People's Credit Union, we offer a credit builder loan program, which is similar to other products offered at other credit unions. And this helps members that are looking to establish credit because they have never had credit before and don't have a credit score. It also helps members that have not had credit in a long time reestablish credit in a smart, safe, and sound way. And at the same time, it helps members build a savings account.
Can you tell me a little bit about how that loan would work?
Absolutely. So the member applies for credit with us, and we offer the member a small balance loan, typically $500 to $1,500. It varies by credit union, and we deposit the amount of the loan or the principal borrowed on that loan into a savings account for the member to secure the loan. The member makes regular monthly payments over a short period of time, 6 months, 12 months. Once the member has paid back the principal amount borrowed on the loan, the member then has that amount in a savings account in their name that they can use to start their savings or spend in any way that they wish to spend it.
Wow, that sounds like a great product. So
is.
you would say you would definitely encourage individuals that are looking to establish credit to go to a local credit union and see what options they have?
Absolutely, because another unique feature about that loan is the way those loans are priced. Because those members do not have a credit score or have not had credit in a while and do not have a credit score, we do not use risk-based pricing or pricing that's based off the consumer score to price that loan. Typically, members have a credit score, and that correlates to the amount they're charged on consumer loans, but in this case, these members have a 0 credit score. So the loans are typically priced even lower than a regular consumer loan, or especially lower than a credit card for members that don't have credit established. So it's a great way for life starters who are looking to get their first loan before they get an auto loan. People are required to have a credit score when they apply for an auto loan or for a mortgage loan if they don't want to use a co-signer or a co-borrower. So this allows typically younger members, anyone 17 or older, to apply for credit and establish a credit score as they make those regular payments. If the member is under the age of 18, we do require a parent or guardian to co-sign on the loan, but it is a great way for that member to establish credit and build a credit score, and then 6 months later, get an auto loan.
That's wonderful. Let's talk about a little bit about loans that credit unions offer for those people that are carrying high interest credit card debt or feeling a little bit underwater with debt.
Absolutely. We all know that credit card debt is a huge problem in our country, and a lot of people feel overwhelmed because their balances on their credit cards are so high and they feel like they don't make any progress paying off their credit card balances. In that case, credit unions offer debt consolidation loans. At People's Credit Union, we offer a smart loan for debt consolidation to pay off credit cards. And it's different than paying a credit card or a revolving balance on a loan. It's a fixed rate loan.
Okay, maybe could you just explain a little bit specifically about how that product would work?
Absolutely. So because it's a fixed rate loan, the member makes fixed monthly payments set at its interest rate when they take out the loan. So based on the debt the member has and the amount they're borrowing and the time they're going to borrow those funds, the consumer is set with an amount that they borrow and an interest rate. That interest rate never changes, and their monthly payment amount never changes over the life of that loan. When they take out that loan, we actually pay their credit cards off with the proceeds of that loan. The member does not receive cash out from this loan. We mail the checks directly to the credit card companies to repay those credit card bills. It's different than a credit card balance, and the reason why it actually helps to pay off debt faster, because credit cards use revolving debt with variable rates. So again, depending on the member's credit score when they take out the credit card, the rates can be set different, anywhere from 9%, sometimes up to 18-20% on a credit card. And the credit card statements only ask for minimum monthly payments. And what that means is that every month you receive a credit card statement or a credit card bill, and the credit card companies require you to make that monthly payment. That monthly payment can change month to month depending on how much you've borrowed, what your interest rate is, what fees there are. But the problem with making your minimum monthly payments only on a credit card is that you're typically only paying maybe 1% or 3% of the principal balance you actually owe on that credit card. It can take a long time to pay off a credit card bill if you only make minimum monthly payments.
Yeah, that can be tough. It sounds like a debt consolidation loan also will help for budgeting purposes, where you can know what your monthly payment is for that loan, and then you can build your budget around that too.
Absolutely. That's a great point, because as we said, a credit card payment amount can change from month to month. If you use your credit card balance, because you can pay it off and you can reuse it. That's why they call it revolving debt. You can have a $1,000 credit card, pay it off this month, and go out and spend $1,000 again. If your balance is $500 or $1,000, your monthly payment can change drastically. Also, your rate can change at any time depending on the terms with your credit card company. So it's hard to budget when you don't know if your monthly payment is going to be $25 or $200. If you do a debt consolidation loan, you know your payments are not going to change over the term of that loan.
So Amy, tell me a little bit more about other types of loans that credit unions offer as an alternative to credit cards.
Yeah, that's another great question, because a lot of times a member or consumer will find themselves in a predicament where they may need an oil delivery. Winter's coming, the nights are getting chillier, and a lot of members are faced with having to pay for propane or pay for oil delivery. A lot of credit unions, like People's Credit Unions, offer fuel loans that allow a member to pay for their fuel at delivery and then pay off that amount over the next year. It allows, again, for budgeting purposes, it allows the member to know they have a small monthly payment and yet they have oil all winter.
Do credit unions offer other types of loan products that are not home equity products that would assist a homeowner in creating a more energy efficient home?
Yes, we do. Actually, home equity loans are different because they require a home to have value already built in that's used to secure the loan. We offer different products like our energy efficiency loan that allows members to finance a new furnace or windows or any project that improves the overall efficiency of their home. Not only do we allow them to finance funds just to be used for the cost of the new furnace or the cost of the new windows, we allow them to also wrap in the entire project, including any electrical costs or contractor costs or any other ancillary costs that are related to that project. It's a great alternative to putting an emergency situation like a new furnace on a credit card or getting a home equity loan if they don't have value in their home or don't want to use their home as security for a small project.
Well, that sounds like a great alternative to a home equity if that's what you're in the market for. Amy, I just want to thank you for taking time today to talk to us about the various options that all the great credit unions out there in the world can offer consumers. And I'm personally a credit union member, and I believe in what credit unions do, and I think that that more people should explore what a credit union can do for them.
Absolutely, and these products that we've talked about today are mostly particular to People's Credit Union because that's what I am familiar with. However, I know that all of the credit unions in our area offer products very similar to this. I would encourage anyone who needs financing, who needs to establish credit, or needs to consolidate debt because they just don't know what else to do. I guarantee that credit union has an option for them, and they should visit their local credit union today. And in addition, if a consumer does not know where their local credit union is, they can go online and visit bettervaluesbetterbanking.com, put in their zip code, and their local credit unions will be listed there for them. And they can choose the one that's most convenient for them, pick up the phone, call them, or go online to that credit union's website and get information today.
That's great. I think that's a great online resource, and I would encourage anybody that's looking for a local lender to go to bettervaluesbetterbanking.com.
Absolutely.